Good morning, traders and investors. Welcome to Thursday's bullish edition of Benzinga's pre-market prep, brought to you by Options House. Got a pretty good lineup today, I guess. Joe, what do you think?
Well, actually, I was more curious, Joel. What sound does a bull make? Like we do the bear
Or
imitation, but how does a bull do a bull sound for us?
Uh,
is that like stampeding?
yeah, I think
Brum,
I'm like,
brum, brum,
yeah,
brum.
yeah, or just like, yeah, putting your feet into the
That
ground.
sounded good. Who did that?
That was me.
That was good.
That was me. So it is
I'm
Thursday,
impressed.
ladies and gentlemen. There's only about 200 companies reporting today. No big deal. But we've got Fari Hamzei on the show today. It's expensive soup day, but maybe it's lobster day as well, because he's going to tell us how to pay for that expensive food with his stock picks of the week. We also have Belus Capital Advisors Brian Sozzi on the show today at 9 a.m. I just spoke with
Saucy!
Brian. He's very excited to come on the show. We cannot wait to have him preview for tomorrow. Joe Gitz is back after a 2-week hiatus because of Good Friday, and we have the talented blonde Kristen Benz.
Wow, we got a good show. And Fari, I bet you Fari had some lottos, some upside apple calls or something, huh? What do you
Doesn't
think?
everybody just have Apple calls? Isn't the way
Not
it works? They get
everybody.
on CNBC, and every single person that came on CNBC had to say how they own Apple.
Specifically, Hindsight Capital Group absolutely killed it on Apple there. So
Hindsight Capital Group was all over it, Shaky.
all
They were
over
all
it.
over it. Everybody and the grandma owning Apple and loving the world today, all except me. Everybody except Denny. And I actually do
So,
own Apple
Dennis,
in
you
my
probably
portfolio,
sold your
but
Apple from Kurt's article
I actually
yesterday from
do own Apple in my
Creative Global.
portfolio, but it doesn't matter when you sell a straddle.
Hey, Dennis, hey, if anyone's listening in here early, this is how you take a loss in the market with a smile and you learn from it. Dennis, you want to talk about your little foray into the options market?
Well, and this is also just calling and looking at at the premiums and the options and saying some of these premiums just seem ridiculous. Anyways, Apple had 22 points on the straddle there yesterday at the 525. I was like 5 minutes before the close. I was like, screw it, I'm writing it. So I only did one contract each side, so a light position. But I was like, well, in a perfect scenario, if it went nowhere and closed 525, I'd make $2,200. Basically, I was looking at it and analyzing it from the perspective if it goes up 22 points, it's going to be running in the whole resistance area that I was at, like a 547. If it falls 22 points, which was somewhat concerning, I was like, it's going to be around 500, and the company keeps coming back in and buying stock back down there anyways. I didn't see it going much below 500, so I'm like, I like this risk return. And the risk is obviously because I didn't do what I should have done. Maybe is what Nick does. He always buys an upside call and sells, and leaves himself not open ended. I was like, screw it. I'm leaving myself open ended. There's no way in the world. I don't think this thing's going to move 22 points on this earnings report. Halt the stock at 4:30, and then I just watch the headlines come by. Well, the earnings, oh, those look pretty good. Oh, well, the buyback, oh, that looks pretty good. Oh, 7-for-1 stock split. I'm like, oh crap, that is not good news for Denny's short straddle. Anyway, so sitting there from 5:30 or 4:30 to 4:45 and waiting for the stock to come out of the halt, and I'm like, this is not going to be pretty. How much money am I going to lose on this? Anyways, I see a 600 bid, and I was like, no way, they're not going to bid up at $600 for this thing. So, anyways, they did not do that, thank God. 561 is where it opens, and I'm looking there like deer caught in the headlights, but I'm like, meh. Oh well. So, anyways, I covered half the. I to be able to cover because you can't cover options; they're not traded. You have to buy the stock back. So, anyway, so I bought some stock back at 564, just half of them. I bought 50 little shares because it's only 100 shares, and then I'm probably just riding the other 50. Screw it.
The one thing is when you sent me when you Skype me and you go, I'm bored. I'm bored. I'm looking at this apple straddle.
No,
I'm like,
never
oh
put
shit.
on the board trade, folks. Never do
Never
the
put
board
on the
trade.
board trade. If you're bored and you're looking to put on a trade, especially ahead of Apple earnings, don't put on the trade. But
So apparently, I'm the only person on the street who was bearish Apple. Apparently, the only person because every analyst that got on CNBC had to say how they're long Apple and talk their whole ooh ah. So, anyways, laugh at me, folks, because everybody who made money on Apple made it at the expense of me.
I'm glad you listen to all our traders that come on, like Fari and Nick Shaheen. You know how they talk about that they go into these lotto things, but they cap their risk and everything. And Hey, really, what do you expect our people? GGB, what do you think about this? Is Dennis does he get a timeout today
I do
for
get
this?
the timeout. Put me in the corner for this one. Put me in the
But
corner
you
for this.
taking it like a man, maybe and
How else are you gonna take it? You're done. It's not like the old days too, where well, they halted in this case, but sometimes you could scramble to get out of it. The way stocks move nowadays, they price in the news immediately, and they go to that price, and then they stay at that price. And this thing gaps up to 40 points, and you have no out. So yeah, so you need to do it like Nick. I should have bought an upside call a little bit higher to cap my losses and write a downside, but I was just lazy and I was like, nah, it's not going 22 points. And you think after 15 years of prop trading you'd learn, but no, I'm still learning every day.
You
That's
live
what
and
it
you
is.
learn.
It's learning.
I'm no better.
Next time I'll cover a little
Next
bit.
time I mean I'm no better. I told you it was like free money.
I
Is
know
what that-
Joel's like after I put that, I'm like, I want to put in the board trade, sell this straddle, and Joel's like, can you lever that up?
and then
I'm bored. I'm only doing one contract, Joel, because I'm bored. I'm going to try to make $2,200
yeah, and the other thing that you pointed out too, and you kind of had even before the number was released right at the open, you had a little bit of trepidation because you said it blew out another buck right before the close, so you were down a buck on it right away. So someone obviously was picking that up, but not
buying
to
straddles.
not to.
Play was to buy the straddle.
I'm never selling another straddle again. No. All right.
Ever again.
Brad, could you go into a little bit of the details on the Apple now, and just not to make things worse, but we'll just finish that up.
Let's rub it into Denny a little bit.
To the technicals.
Yeah, sure. Let me just pull up real quick. Got a bunch of comments from the call, and I'm scrolling through. I mean, Dennis did a pretty good job there. They did the split. That was huge news. 7-for-1. That's going to take place on, I guess, don't quote me on this one. I'm going off the top of my head. June 9th, I want to say. I think the split will be effective. So they raised their buyback plan from 60 billion to 90 billion. They are going to raise their quarterly dividend by about 8%. That will take it to I can't find it right now. I want to say 329 per share. So for the report, company reported 1162 versus 1017. Sales came in at 45.65 billion. Street was looking for under 44 billion. Gave a little bit of Q3 sales guidance in the range of 36 to 38 billion, and the Street is around 37.8 billion. So guidance was sort of at the lower end. One comment that was pretty interesting from the release, they said they were going to access the public debt markets in 2014. So I'm not really sure what they're going to do with that, if they are going to just continue this capital return program, if maybe they're looking to do some bigger acquisitions, that kind of thing.
Hey Dennis, just one last trading recommendation. The 50 that you put on, maybe lay it out again here, because don't you think the volatility is going to be way ramped up on the open here, and it's going to
Yeah, I'll lay it out probably.
Yeah, lay it out.
Open
Okay.
shop,
All right, let's just look at the pre-market high. We just hit that moments ago at 572 and a quarter. So we'll keep an eye on that. We have backed off 3 points from that level. You got to figure people that are long the out of money to the calls or call spreads or whatever, the weeklies. Man, if you're not taking a profit here on the anywhere from the 5 and a quarter to 565 calls, even the 570 calls, weekly calls might have a little juice in them. So I'm keeping an eye on that 572 and a quarter level.
You know what else they were saying with the 7-for-1 stock split last night? People were speculating that when they dropped this price down to where it would be like $80 or something like that when you take it. Do the math there quick for me, Joel. The air math. 56 divided by 7. Sounds like around $80.
75 could be 85, but who knows by the time.
Yeah, it could be 100 by the time, No, but seriously, they said that they might actually, be thinking about adding this to the Dow.
Oh,
so
yeah,
that
yep.
would be another catalyst for it to move higher too, because the pricing point, obviously, the price weighted index, which is the most ridiculous index out there, anyways, doesn't like to have $500 stocks in it because it skews the index too much. So when the stock price falls to $75 or $80 after the split, then it could get added to the Dow. So that's something else to consider here as well. And people are thinking that on the street too. But I don't think this is going to be one that gives it all back. Unfortunately for me, I think you'll find great support down the whole 560 area. That's where you're finding it after hours last night. That's kind of where there was some resistance there late January, and that's where I'm looking to bring it in the lower 560s if it gives me a shot down there.
Okay. Yeah,
Facebook
let's move
too
on.
earnings. This was a straddle that I should have wrote because there was $6.50 on the table on this one, and it's only moved $3.50 here this morning. So this would have been the better straddle to write. Brent, you got the numbers on Facebook?
Yeah, let me pull them up though
Why did they
real
hit
quick.
this thing? What was the headline? You think it was just a bad algo or something? Why did they whack this thing down to
I know.
57.74?
Well, show us that pre-market chart there. 57.74. Yeah, I see the spike down there. I was actually looking at it right on the report. It actually was a few seconds down there too, because like, oh, they're hitting it. Because I saw the headline number come out, which Brent's going to give us here.
Yeah,
Brent.
they reported 34 cents versus 24 cents. Sales 2.5 billion versus 2.35 billion. They announced that their CFO is going to be leaving. Apparently, it was for personal reasons. He wants to get back into the medical sector, I think.
Sarepta? Was that true?
Sarepta, yep, I think that was it.
So he wants to go from Facebook to Sarepta.
Well, I guess he was like a pharma biotech guy, so kind of getting back to his roots.
Okay. Wow. Crazy price action in this. Obviously, that 57.74 low that it hit. I mean, unbelievable that it would get that. Wait, did it get that low? The pre-market? What the heck
Yeah,
was it? Yeah.
after hours last night it did. I watched it go down there.
56.95. Actually, it
Yeah,
got to,
they
and then
smacked
it rebounded like a bandit here. Pre-market high stands at 65 even. That's a nice round number there. Also going to the daily charts here, you can notice that we had a high at 64.95 on March 26th. So we have backed up. Well, we're still right at that level. So 65 will be the breakout. Air math here for me, 72.50 high. You had to break down to what, 55 and change. So what's that? 17 points, right? 8.5 of that. Boom, boom. Get you. We're a little bit above that 64, 65 area. I don't know. 65, even if it broke above there during the regular session, the pre-market, I don't think I'd get too carried away. Maybe possible short if it goes above 65, then comes back down through it.
We have so many other earnings
Okay, let's get
reports,
to
so
them.
we won't. Well, let's start to get to a few of them here anyway. Start with General Motors here, and here's another stock. Doesn't matter if your earnings aren't that great, we just buy anyways. General Motors 6 cents versus 4 cents, so they did beat by a couple of cents on an adjusted basis. Revenue missed by almost $1 billion, 37.4 billion versus 38.4 billion. Doesn't matter. We buy stocks in this bullish market here, and the stock is trading up almost $1 here right
Wow.
now. 35.33 by the dippers, rewarded once again in General Motors. Those who were picking bottoms at 32 a week and a half ago are handsomely up here now.
My mother-in-law was over for dinner last night, and she said to me that she was looking at that stock. She goes, because with all the bad news and everything, she goes, it was still going up. And I mean, I guess it's a perspective of when you look at it, because it did bottom, all the news, all the recalls, got down to 31.70, and now you're getting a lot of it back here. Back up at 35.50 pre-market high. You had a high up near 36, 35.50 and 35.70 were a couple highs. It's really just coming back up to that major trading range that it had towards, since the whole recall thing has been going on. So, once again, getting some nice profits here on a quick move. We'll see what happens off the open. I doubt this thing's going to get through 36 today.
Quick look at Ford here too. They will
Ford's.
report tomorrow morning, and the stock is up and approaching major resistance. You had a triple top right on the kisser,
Oh,
just under 1650, because they know there's somebody sitting there at 1650 with a big order. At 1645, the high on the second, 1649 on the third, and then 1645 on the second, or 1649 on the second too. So basically three highs right in the identical area, 1649 right under that big 1650 level.
and we're going to open right into that puppy right
And they're
now,
opening
huh?
right into it. Yeah, so keep that
Okay.
in mind here. But who knows? This market, they probably take it out and run higher. But keep that in mind for sure. We're opening right into resistance. And usually those are good setups here. But this is the bull market, and you got to watch shorting stocks.
Especially off the open.
The-
Trading up 21 cents for Ford. Just think about during the regular session how much stock it has to chew through, to move 21 cents. Now you're getting that in the pre-market trading. Not a lot of volume. Keeping close eye on 1650.
Also reporting here this morning, we've got Eli Lilly, LLY here. And this one actually just trading slightly down. We got one actually trading down, Joel, but it's not trading down much. Earnings came in line, 70 cents versus 70 cents, 4.68 billion versus 4.79 billion. So this one is actually just a slight revenue miss. It's only an odd lot that just trade 92 shares just trade at 59. It is bid at 59, offered at 59.60. So it looks like it's going to kind of be tight here off the bat. This is kind of a failed breakout on the charts. You look up here and it got up, finally took out 60, went all the way up to 61.15 2 days ago, came right back down under 60. That's the bogey. That's the level that resistance has been at in the past, and that's the level that I'm looking at to still hold up as resistance here today.
Yeah, trade down slightly. Just keep an eye. 60.03 was your close on Tuesday. Wednesday's high, 60.01. Once again, people reloading at that number. So take a look at 60. We'll have that acting as resistance. If in fact it get above there, things kind of open up to that's a multi-year high there at 61.15. But Dennis, you always talk about when I tell you not to buy a stock. Well, you were asking me about this thing when it was in the low 58s, and you were thinking about dumping it in your portfolio, and
Yeah.
I said hold on, and I never say that.
I've still got it in the portfolio. It's one of the biggest positions I've had. I had this one for years. I think I told you guys I bought it back at 34 or 35 bucks. Merck and Lilly, those are two of my biggest positions. They've been great. They've been great in the portfolio, and some of my biotech stocks have been great as well. But anything healthcare, drugs, biotechs have really done well here in the last few
Before
years. And
before we go to the next earnings report, I just want to give you, just to boost your ego here a little bit after that Apple shellacking. But you did nail these biotechs at least early in the session. They did open up. That Biogen did open up near its highs. Went down all the way under 300. I don't know if you were able to get short, but same thing with Gilead. I mean, those stocks opened up. Gilead actually opened up. It is a penny off its high of the day,
yeah.
and then ended up selling off. But I just wanted to give you a little credit on those.
Well, we
Your
thought we
ego.
might see a little bit of weakness there off the hop there, just because Gilead had such a good report and they weren't buying it. That was kind of the tip off for me. So yeah, so that was a decent call there on my part yesterday. So I guess I've been a little so I was a little slumped with Apple, but the biotechs was a good play there yesterday. I actually did get out of my Biogen position there yesterday at 308. It's back up at 310 here this morning. So I don't know. I'm still looking at these biotechs though. And I'm just not that. Celgene just reported here this morning too, so we might as well talk about it while we're
Okay.
talking about the biotechs. Buck 67 versus a buck 65, 1.71 billion versus 1.77 billion. Those weren't that great. Stock is trading down at $1.82 here, so it's pulling back a little bit more too. But the biotechs really aren't popping here this morning. This obviously is more of a tech rally here with Apple and Facebook.
Yeah, let's just take a look. That did get a spike down here. This one's kind of the calmer one of these other biotechs, but not great earnings. Did take it down here, just hanging out at 143. Yeah, just made a low here just recently. Had a nice double bottom at 144.10 area, so that will act as resistance. Boy, this thing kind of just like has a decent looking chart on it. Pulling back a little bit. I don't think you're going to get down to those lows at 140.29 or 140.75 here. Just the way this thing is just holding up at 140. Oh, it did hold up at 143.
I think it might.
You think it might?
I think
Okay.
it might see 140 here today. It just went 142.70. The earnings weren't that great. I think there's like a rotation thing happening. I wouldn't be surprised if everybody's jumping in the tech stocks here today and rotating out of some other stuff. I mean, we're only up 7 points with fair value. I think we're up 9.5 on the S&P futures, and you got a lot of techs trading way higher here. So that'll be interesting to see. They'll be rotating out of something. I'm not sure if it's going to be the biotechs or not, but the Celgene earnings were not great.
Okay.
Caterpillar, they're rotating into that one here today. Holy cow, the cat is on the prowl. 161 versus 123. That is blowing away the numbers. 13.2 billion versus 13.24 billion. Slightly light on the sales, but the earnings are awesome, and they are buying the stock. Huge guy at the point in the New York book, 130,000 to sell at 105.
Buy 'em.
Obviously, it's probably, well, you can't buy them until 9:30, but that's something to think about there. If that holds down that New York opening print, well, we have to analyze where the stock's trading at that time. So we still got an hour and 10 minutes before that liquidity will become active. Right now, it's 107.50, so it's $2.50 above that huge seller at 105. Has traded some significant volume, 93,000. I'd imagine by within the next hour, probably does another few 100,000. So maybe it doesn't come into play, and maybe it does open up here at 107.
Price improvement, though. That guy's going to get some price improvement. improvement.
He is going to get some PI there, yeah. He's going to get some PI. He's sitting out there at 105, and if it opens up and trades 106, he'll get a extra buck on his stock. He's sitting out there, though. It looks like it's an institution GTC order. This is a new all-time high for CAT, is it not?
Nope. Nope.
No. Oh, we got to
No,
go back to
let me see.
2012.
No, this thing was up in 115
Yeah.
quadrant here a while ago. If we go back a little bit longer term, but Dennis, just real quickly, that just explain that price improvement there. If it's a GTC order, it's been in there for the book a long time. They're probably not going to change that order, and priority in the book, they'll get they're automatically going to get that opening print then, correct? No matter where it's at.
Yeah, the designated market maker, that's on the New York book, and the designated market maker for CAT on the floor basically puts together all the buy orders, all the sell orders at the opening print. So if you're offered there at 104 or 105, if it opens at 107, you'll get 107 if it opens at. But we were just saying an order the size of 130,000 shares at 105 will tend to hold the opening print down a little bit too low sometimes because it's such a large order. So if that order didn't exist, the stock could possibly open higher. So sometimes what that will do is give you an actual opportunity to buy the stock because it's been trading heavily in the pre-market way above that, and maybe that print holds the price down like 106 or something, and here it's pricing at 107.50 right now. But I always like to look at where the stock is trading at 920, 925 because we have another hour pre-market trading and the price could significantly move. But if it starts to trade around 107, 107 and a half at 925, like 5 minutes before the open, that order is still active. Maybe you can pick it up at 106 and a half because that on the New York opening print and have a little quick trade there. Maybe even they call it market fragmentation arbitrage there, and that's a potential possibility. So keep that in mind. Just the big orders there.
Pre-market high 108.64. We backed off from that level. Little volume traded up there at the 745 bracket there. So keep an eye on that. This is the highest for the CAT here since April of 2012. You had a high at 199.77 going back then. So if you're super major extra bullish, maybe you can hold out for the 109.77, 110 level. Is Deere getting any kind of bounce on this?
Yes, it is. Deere is trading up $1 here right now, 94.58. That is breaking or trying to break it out. Interesting enough, 94.58 was the high on April 10th. So we are right there right now, actually trading 94.67. So this is another one I would expect will probably make a new high on the move here today with that Caterpillar earnings.
Yeah, Deere getting a little pop here. Just ticked up near the $95 level. 94.89. Very little volume trading on this. Former high in the move here back at April 10th, 94.58. So open it up into little resistance here. See if we can blast through the $95 level. And I just wanted to talk as far as sympathy plays and whatnot. And couldn't get this one off at 47 cents. Well, I'm going to look at the T, and the T was trading down quite a bit and had a volatile session. But that Verizon, if you just were flat out shorting that thing at the open yesterday, you could have gotten some trades off at 47.50. Declined under $47. Did come back, but it's good sometimes you can get those sympathy trades off.
Yeah, hard to do that one though because at 47.50 where it was trading the pre-market, it was gapping down already 40 cents. So you're like, well, how much sympathy Verizon's going to report the next day? AT&T's down $1. Should Verizon go down $1 too? I don't know. So it's hard to play it that way. But yes, Verizon did report here this morning, and they are bouncing back a little bit, not quite as bad as AT&T. 84 cents versus 85 cents, 30.82 billion versus 30.65 billion. So the revenue is solid. Bottom line missed by a penny, but they're buying everything today. Like we said, this is the bull market, and they don't sell stocks anymore, and the stock is trading up 20 cents despite missing their bottom line earnings report.
This thing did not rally, though, with the way AT&T did here, so it should be interesting. AT&T had that 5, 6, 7-point run, while Verizon just kind of stayed there. So major resistance above the $48 level. Let's see how high they can get it up today.
Also reporting here this morning, we got a bunch of home builders here. Maybe we'll just fly through them. You got DHI, which is D.R. Horton, 38 cents versus 34 cents, 1.7 billion versus 1.55 billion. Stock trading up 80 cents right now. You got Ryland Group, RYL, which hasn't made any pre-market trades, and it missed 42 versus 45. Revenue beat though 489 versus 473. So they'll probably rally it just because if you beat on the top line, that's good enough in this market. It seems like Pulte Home, which actually missed earnings on both the top and the bottom, but who cares because we just buy stocks in this market. It's trading up 50 cents, 1909 right now, despite missing by a penny on the bottom line and by missing 1.12 billion versus 1.18 billion on the top line. So it doesn't matter. Like we said, they buy stocks regardless of good earnings or bad earnings, it seems like.
Okay, yeah. What about 3M? They reported too, correct?
Yeah, we got 3M here, and holy cow, there's a stock trading down.
Oh,
Wow, a stock that's actually trading down on a missed earnings report. $1.79 versus $1.80, 7.83 billion versus 7.96 billion. So miss on the top, miss on the bottom, and 3M is trading down $2 here. Will it stay trading down, Joel? Will we actually have a stock that is red today?
no, no, no. Every single stock is going to be higher. I
Maybe
mean,
not
I
gold stocks, but
yeah, yeah, yeah. The gold stocks are down. Oh, we'll talk about that in a second here. But you got to spike down here to 135 immediately off that report. They took it down to that level. Now coming back, 136 posing a little resistance. Not a lot of volume here. Kind of in an airy quadrant here. You did have a nice run up on the stock, and now it's starting to come back down. Looking at the dailies, you had a low at 134.81 on the 16th. So keep an eye on that 134.81, 135. If that can hold, probably just can rally back up. Won't get into yesterday's range. Below that 134.81 area, you got a major drop to the super extra major support at the 132.02 level. That was exact double bottom from the 14th and the 15th.
Qualcomm reported last night, and here is a stock. We might as well go with the down ones. There is a couple here. Qualcomm trading down. Actually, this report didn't look that bad, so it's a funny market. $1.31 versus $1.22, 6.4 billion versus 6.48 billion. The guidance Q3 was a little bit light though. I think they didn't like that. And the stock is trading down here at 77.37 right now. But look out, there's a couple bottoms right here in that area. We go back to April. You got just two bottoms there. You see where I'm looking at there, Joel. On the 8th, 77.48, and then on the 11th, 77.53. We're trading kind of a little bit below there, but that's the area where the bulls need to come in and defend here so that Qualcomm doesn't stay red.
Well, the initial spike took it down to 75 and 95. So
Whoa.
it just, the fact that it did take out that area makes me less leaning on that 78. We did take that out. So keep an eye on the pre-market low. If we really get into gear, they really like this thing around the $76 level. Quite a ways from where we're not that far from where we're trading now. But if you're short or you kind of want to try and get a quick bottom level, keep an eye $76.
One more bad one here, which is actually starting to bounce back here now, is UPS. They missed big time, 98 cents versus $1.10. Guidance
Weather.
was weak a little bit too. And yeah, they can blame the weather. And didn't FedEx, I don't remember or not, did they miss and then bounce back? I can't remember when they reported there, but I remember them not doing that great, and then the stock was trading higher. And here's the UPS. Bring up the pre-market chart. It was trading quite a bit lower earlier here, and it's already bouncing back here now. Now it's only down $1 here. So what do you think on this UPS chart? Is this one that can actually come all the way back despite a pretty horrific earnings report?
$97 here. That's taking a look at the pre-market trading. We hit 97. Got a nice bounce off that 97, 98, the early range here so far. Boy, it's tough. You had a 96.80 low on April 17th. That coincides with the 97. Take a look at that as support. Below that, you got another buck drop to 95.90. Coming back in the rally end here, you got a ways to go to get to the double bottom from Tuesday and Wednesday. So if you get up in the 98.50, 60, 70, 80 level, expect to be good resistance since you had a couple lows in that area the last two trading days.
All right, let's talk about gold here. Move away from the earnings reports for a little bit because who wants to own gold in this bull market when everything's going straight up? We don't need no stinking defense. And gold very defensive here, trading down another, what do we got? $14 here this morning. So gold breaking down to new lows here. gold in the crapper, and all the miners are pretty much in the crapper as well.
Yeah, it's interesting. Goldman went to that neutral rating, kind of up gold and silver there. So I was thinking, hey, maybe I'll take a look at some of these GLD, calls and puts. And then, Jake pointed out that when they did the upgrade, they were probably out there selling gold and silver. So I held off on it. You've taken out some support. The 1280 level was trying to hold up. Gold has not been down here since early February. You had a low at 1264.70 here from February 10th. So if you're looking for some more continuation on the downside here, keep an eye out for 1264.70. Silver did the same thing too. Silver is, man, that thing just never went anywhere when the
No,
gold
it didn't really.
when the gold was rallying. For the longest time, we're getting back to the lows of the year here. The lows for the year in silver. At December 31st, you hit 18.758 was the low. You hit a low in today's session at 1893. So 19 starting to give a little bit of support to the silver market.
Did you look at GWPH yesterday, and did you look at it here this morning? Morgan Stanley upgrades the stock 3 days ago, puts the 103 price target on it, and everybody just has to buy. Morgan Stanley likes it. We got to buy this thing, and it's going to get all its losses back here. It's only 10 points off its highs now. It looks like it's going to get it all back, try to this week. Anyways, so was the gap and go 2 days ago when it went from 50 to 65. So just tax on another cool 10 points yesterday. Now it's trading up another 5 points here in the pre-market. I don't know if there's news on it here this morning or not. I don't know if it matters. Everybody thinks it's going to 103, and I guess that's where it's heading. It's ridiculous. This market is just, and think about where we were 2 weeks ago when everybody got on CNBC and you had Carter Worth coming on there saying, oh, I see 1580 coming on the S&P because the technicals are breaking down. And every other person getting bearish there on the street. And when we were down at 1810 saying this is it, this was the top, and you need to get out of your stocks. And look, we're right back here. We're 10 points off the highs. There's no derailing this bull. He's been on fire for 5 years here. Eventually, it is going to get derailed, but it's going to happen when nobody is expecting it. That is when it's going to happen. So when you see people on CNBC going on there and everybody's getting bearish, you automatically should get bullish. CNBC, the great fade trade, seems to always work. It worked again in that case. And here we are. We're 10 points off the highs, and GWPH is just another one here that if you're buying dips, you're rewarded in this market.
Yeah, that after that move in GWPH, you just you had to think, is it going to follow through? And when you see moves like that, you like to see a follow through the previous day's high, and that's exactly what GWPH did. It had the high, I believe, at 65.97 from the previous session, opened higher, just went only 50 cents lower, took it out. 73.33 was yesterday's high, so we'll be keeping an eye on that. Looking at the pre-market trading here, we have traded above that level. You just want to wonder if anybody's ever going to take some profits in this thing. I mean, it can't go to 103 in 2 days. Did hit 74.94 in the pre-market, so call 75 your resistance level. You have been at 75.95 on March 19th is another possible resistance level in this.
I think this is going to be one. I'm kind of just getting a feel, and this is obviously, just my own feelings here, but I think this could be one of those that pops up to like this whole just under $80 or just sneaks over 80 or something today. Just goes for another ridiculous move off the hop. And then the sellers come in, the profit takers come in, and this thing closes red. That'd be crazy if I was able to call that, but I've seen this before where you have a 2-day move, which is pretty good, and then the third day, the morning's pretty good, and then it turns around on a dime. So here we are. We've got the morning pretty good so far. Maybe after 9:30 we open up, maybe tack on another 3, 4, 5 points. Who the hell knows? I don't know where it's going to turn, but I feel like this could be one that could actually close red today. I don't know why I'm thinking that, but keep that in mind. It's had a hell of a run in 3 days, and there's a lot of people who were sitting on losses here when this thing was in the higher 70s, early 80s, that basically got murdered here. They'll be licking their chops to probably scratch their trades, and there's a ton of people sitting on gains that were picking bottoms through the entire month of March and April that are now up significantly on this issue.
Yeah,
and they didn't light the world on fire. Morgan Stanley upgraded them, folks. So keep that in mind. I think this is just a lack of liquidity that's really drove this thing higher. People caught short the thing that were obviously shorting into this bounce, which was a big mistake. And I think this thing could reverse here today at some point. I don't know where that's going to happen, but I'm calling a red. I'm calling it to maybe take out that 69 low here, but I think it's going to maybe get a little more tacked on before that.
I just pointing out the volume. The reason you really couldn't ignore that move on Tuesday was the volume. 6.7 million traded 5.5 million yesterday. So perhaps if you're waiting to short this stock or take some profits, maybe look for a couple days of tight ranges. Doesn't look like today's going to be it. Then decreasing volume, and then you might get a shot here at something on the downside. But Joe, are you dialing Fari in, or do we go to a break?
I can dial him in. Let's
dial him in. He's fun to bring on live because he's so hyper. We're gonna wake up here in a minute.
Yeah, let me get my seatbelt on here in my chair.
Right, strap yourself down.
Yeah, we got everyone in the chat room. Turn your volume down just a little bit. we got Fari coming in, and Fari is gonna be fired up. Fari Tales, our special segment here on Thursday morning at 8:35 a.m.
I hear ringing.
We won the ringy dingy.
Launch control.
Hey.
Launch control.
This is launch control. Ready?
3,
Targeting ready?
2.
Capcom, you ready?
Wait.
Let's go, guys. Let's go. Apple on F5. Bullseye.
Okay,
Let's go.
Tell us about your Apple trade.
I need some shekels now.
You're getting them from me if you were a long apple.
Tell us.
Well, I posted everything. Kyle and Jason get it live. What are you talking about?
We're live.
If you guys
right
behave,
now.
maybe I'll put you on the distribution list.
Okay, so tell us
Maybe you can make some shekels.
what was your strategy on this one, Fari?
Apple. Talk about Apple.
I had a call spread on each. Call spread on top and put spread on the bottom as a hedge on the bottom.
Oh, you hear that, Dennis? He hedged.
And we made
his
500%, and I missed.
Oh, you missed.
Pardon me?
You missed on it?
I missed in the sense that I missed really to the top price. I was too after Netflix. I was pissed. So part of my hedge. Are we on the air?
Oh yeah.
You're on the air. That's okay though.
Okay, sorry. Blank. Don't you blank it? To hit a ding or something.
Hey, how
You
far?
lay it and put a ding in there. Anyhow,
Come on, Brad,
you didn't mean
you
to use
gotta say that.
4-letter words.
You didn't use any for. You should be here on the pre-market prep show if we have some good conversations. But anyways, tell us about.
We have Amazon. How about I'll wake you guys up tomorrow for Amazon. How's that?
Okay, just tell us what you did, what calls and what puts you put on.
Sure, no problem. Let me bring the trade up, and the ticket is out. Actually, went to our emails overnight. It's been on the web pretty much since market closed yesterday, because then it's locked out, right? So you cannot mess with it. Here's the trade, the two trades. Trade one, trade A. Says Q1 range or Apple was this is a strategy, 493 to 549. The majority of the street seems to be short Apple. I'm looking for a moderate 4% rise in the next 4 days. So I bought for every $25,000 amount of money in our trading capital, 3 contracts, paid $2 each of the following. The color spread is 545 to 555. Okay.
What'd you pay
And
for
the
it?
stock at that time was 527. Our target price was 550. The strategy is vertical calls.
And what'd you pay
Okay.
for it? What'd you pay for it?
As I said, $2.
Oh, okay.
So $600 total. Brought back $3,000.
That's not a bad little
Welcome
trade
to
there.
America. And we were in the market. It went out at 12:55 Central Time. So 2 hours in the market.
That's
Good little trade
yeah.
there, Fari. That's a good little trade. You're getting my money because that's coming from me because I lost $2,000 on the thing.
My point is, I should have gone to 555, 565, which was trading at. It's
Who the hell thought it
569
was
now,
going that
my
high,
friend.
though?
I would have paid less. Hold on. I would have paid less and made, and because I was paying less, I would have bought like 5 contracts rather than 3. You see my point? That would have been a lotto. I missed that one. So in terms of what do I grade myself? A minus.
Okay. Hey, you can live with an A
Not good,
minus.
not good. And then I heard back from a couple of hedges in New York, which I sent them as a courtesy, the real life done, and they said F. That's all they said, F.
Yeah.
Because they didn't take it. One guy didn't take it. He said F. Well, you fill the blank.
Okay. So Amazon, I heard you mention that.
Now we do also. Hold on. Let me give you the professional way of doing things. Okay. We also bought later on. We bought a little lotto on the other side, just in case if we were wrong. Okay. And we have to do that very late. We did that 14:30. That means half an hour to the close. We bought a little put spread 505 and 500. We paid $1 for that. You got to do that just in case this thing missed. And this was our argument. If Tim Cook and company miss this time, this is woodshed time. Hello? I mean, somebody will want their heads. And these were the sigma levels. Remember, we work everything based on sigma levels. I don't look at rumors. I don't look at any of that. I look at what the market is telling me. The 2 sigma negative was 514. 3 sigma was 506. 4 sigma is all negative. Negative 4 sigma was 498. Okay, on a daily chart. So that's how you find your target neighborhood intervals. That you take that, then you work for what kind of what do you call it I have? What kind of volatility I'm dealing with. Now, what was the problem with the vols? As you all know, the front week was through the roof. Why? Well, the market makers in Chicago, they need to pay rent too. They juiced it up. And everyone wants to get to that front week because I don't want to pay too much time value. Guess what? They're bending over. They're paying through MIVs. Pardon my French again. Bloop that one too. Next. So what I did was I went 1 week over. I said, what if I'm wrong? Maybe it takes a little bit of time to get there. Either way. So we bought, these were May 2nd. So I gave myself 10 days for this to work out.
Extra week, yeah.
Okay, that's the one. Now, F5, next trade. Remember, as John Goodfriend of Sully said, when we do a trade and it's good, we don't look back. We move on. And Louis Borsellino said, love your losers, because that's how you're going to learn. So if you trade you miss, you need to go and study it.
Did you
But
say?
if you got it, move on.
You said Louis Borsellino? Is that
Yes.
Yeah. Okay.
His partner is one of my chat room moderators.
Oh. Okay.
What do you think this place is? Brad Sullivan, the big hedge fund guy, third floor of Willis Tower, he's one of my moderators.
I'll tell.
Yeah, he runs a fairly large hedge fund.
If you see Lewis, tell him I said hello. His badge in the S&P pit with LBJ, and I can remember in there.
I have it in front of me. I have one of his badges because I used to go to the floor with his badge, LBJ 3394. I'm looking at it.
Yeah, and I remember.
Welcome to America, Joel.
I used to try and trade with them, and like he would be betting on 100, and I'd be like, Louis, 1. I want 1. He would just totally ignore me, and just I'm like.
He was the largest. He was 10% of the pit. The pit was trading at that time 60,000 on average of the SP contract, the big one, $500 a dollar. Okay, he was approximately 6,000 to 7,000 of it every day. He was 10% of the pit. There was one camera only focused on him.
Yeah, when he
there were one guy from CME only watching him to make sure what does he do? How does he make this kind of money? Yeah. He's the one who brought me to Chicago. He's the one who says, Fari, what are you doing in California? This stuff is here. Because he looked at my put call. Right. Now, notice yesterday on Twitter I said that. Guys, put call every expiry, every weekly, because we have a lot of weekly. On Apple is neutral. Google, the front week is a slightly bearish. That's all we could read. But all put calls on Apple were neutral. That means what? The street had no idea what to do.
Right.
Okay.
The
street was as confused as everybody else.
What's some plays coming up today? We're still in the heart of earnings season. You mentioned Amazon, right?
We got Amazon.
Okay, so
before we go there, young man, I'm not finished yet. This is the Navy, okay? Hold on, sailor. Hold on. F5, next trade. Let me read to you. 423, 1345. So 15 minutes after the other one was sent out, this came in. And he said, here it said, we're mildly bullish on F5 networks. It is a tough trade. I have had very little luck with this name. Laws are very high, 105% front week. Front week, 105%. We're keeping the size very small. So we bought 2 contracts, okay? Paid $1.20, okay? Not to pay more than $1.25 because I give him a limit. I tell them, this is what you should be going in. That's what the current price of this, the following the spread is. With a max price, do not pay over that. Because once you do that, you got out of probabilities of winning. Remember, the spreads and what percent you pay is crucial. You violate those, you may win this one, okay? You may win this one, but it's a expected value. It's a game theory. It's the expected value of a series of repeats. If you repeat enough, you could go bankrupt. So we gotta respect those time-honored parametric equations. All right. So we took 425s, which is the expiration. So this week's expiration, 109 to 112. That's a $3 spread. Our target was 112 to 113. Asset price at that time was 107.88. This is again 13:45 Central Time. Now, what is F5 trading at? Hold on. It was this morning was almost 115, 114, very high 114. It's trading at 113 even now. Bullseye. Murray, I'm telling you.
Oh, you stopped. You took a breath.
Now we missed
Okay.
on Qualcomm.
I missed my
We lost on
opportunity.
Qualcomm.
Okay, Amazon. What are you looking
Yes.
at in Amazon?
Yeah.
What's the play? Tell us.
Hold
the
on one
play.
second.
Yeah, so come on, Fari. We need
I
to
need
know.
some schooling.
I can't give you the play right now. I'll email you the play, but because I don't get in this early. I want data coming in. I want everybody fighting with each other, all that. But let me tell you what the wall. I'm bringing Amazon. Give me a second.
Okay.
Ask me something else while the screen is coming up because I got the chart. I want to get the vols in front of me.
Okay.
Hold on.
Can you
Because
get,
remember, I don't do anything without vols. I'm a student of vols. That's why I teach at SIBO. I teach volatility. I don't teach options. Options for kids. Anybody can teach you options. I teach volatility. That's why I partnered with Dr. Whaley per his request. The guy who did VIX. Hello, he called here. He called here and says, Fari, I've worked with you before. I'm doing a project with Alpha Series in NASDAQ options in Philadelphia. The old Felix, you remember Felix? Like BKX and all that is traded there. He says, Fari, is there any way we can work together? I said, Dr. Whaley, I'm at your beck and call. You're the inventor of VIX. You tell me what to do. I will be there, sir. And then we did a seminar at NYSC, Stern School of Business, not NYU, Stern School of Business, and we introduced that. And it was huge. And I chaired a panel, including all the talking heads from Comedy Central, a.k.a. CNBC. All right, let's look at vols. Amazon is up. Okay, your front week, which is this week, is 127. Holy macro. Are they from your tribe, Joel? These guys are very expensive. They must be from your tribe.
Bezos? I'm not sure. But anyways, this
You're not sure. Okay, fair enough.
Is it going to break
But
out
remember,
here?
there's only one tribe. We all start at the same place. There's only one tribe. So, anyhow, 127. The May 2nds are 46. May 9th are 49. And we're kind of stay at 40s. So between you and I may do the two possibilities. Okay, are you taking notes? Here it is. I may do a back spread. It's not easy. Okay, I may do a back spread, but I would sell the front week and buy multiple of back week. Why? I'll take a little bit of money from Apple. Remember, when you get ahead like that, you can bet a little bit better. Okay, I got burned on Netflix. My trade was right. It hit 380 target, but they sold it again, son of a bitches.
Okay.
Anyhow, pardon my French.
You're not on that.
Yeah, it happens. but I have a little bit of time on that. I still have a little bit of time on that. I may probably roll it out. I do believe in Netflix, so I'll roll it out. But back here, I'll probably sell the front week and buy 2 or 3 of back week. Okay? Again, this has to do with the vols. Remember, these are all static now. This all changes with Apple because of the Apple move. Look at it in QSAR. Look at the block trades, plus look at durable goods. So we're static right now, pre-open. But once the market opens, I'll be glad to send you guys the trade live.
Okay.
As it comes out, just email me your emails. I'll send it to your email, okay?
Okay.
Can't put it on internet because we have a lot of trades ourselves. We cannot block, we can show our hand like that, okay?
Okay. Hey, Fari.
Because other people would front run us.
We got just got a request in here from J. Dot, and I know you're going to love this. Fast Money last night was reporting heavy call action, and it's trading down this morning here.
Dunkin' Donuts.
What is the name?
Dunkin' Donuts, DNKN, trading down here after heavy.
I have no clue. I don't worry about the starch and sugar. I mean, high-tech, finance, and energy. The 3 big pieces of S&P. Remember, I trade SP futures. To understand that, I need to know the 3 components. Finance, like Morgan Stanley, Goldman Sachs, JPM, Wells Fargo, those names. I look at techs like Apple, Google, Amazon, Baidu, those names, and then energy like Exxon, BP, COP, Conoco, and Chevron. I look at investment grade names in OEX and SPX. Okay? Why? All the big boys are there. Liquidity is there. There's no one trade to mess up your volatility reading. Well, let me finish on Amazon. There's another alternative on Amazon. Okay? We could find a decent collar spread. Okay? Because you want to remember the volatility is high. You want to have a collar spread or a put spread, whatever, which way you're taking, to crush the vol. Do you know what I mean by crushing the vol?
Oh yeah, just sucking that premium right out of the options.
What? How? How do we do that?
Stagnant market, staying still.
Pardon me?
How's he do it? He's saying with the trade. Explain it.
No, I said, how do we crush the vol? Okay, let me answer you. You buy a spread because you're long one, short the other, and as long as they're reasonably close, the volatilities are fairly close of the same week. Okay, you can't go diagonal with it. See, back spread is kind of a diagonal, right? It's a ratio. Here, it's a collar spread, so it's vertical. So I'm looking at it. I say, okay, I don't do counter spread. I don't believe in that. I only do collar spread. So if I can't do diagonal, my favorite is diagonal, but because that's where really you go. But you got to get everything right, and there's a time you cannot happen, especially on an unknown called earnings, right? Look at Apple. Did anybody thought Tim Cook and Company could redempt their character? I mean, that was a redemption. The earnings report last night for Apple was a redemption of all the mess they've created, including the Apple Maps. All right. So the other alternative here could be looking at, for example, probably April 25th would make more sense because the vol is so high. It's 127 right now as of last night. I look at that and say, okay, I want to do a color spread just on the current week with 1 day to go. And if you crush it, the other side, I mean, you buy, let's say you buy, traded last 324, all right, and right now you see 330, so you're already up 5 points. Well, let's say you buy the 360s and you sell 370s. Because you sold 370, that crushes the wall that you paid for 360. Does that make sense?
Yep.
And now you have to find those levels sigma level wise. You cannot just pick any name out of the air. It's a multi-dimensional chess game. You got to look at that, okay? You got to look at volatility. Remember, I have a bunch of people trading in this, in my service. So that we have to find things that are liquid, okay? Because all people can get in. Otherwise, whoever gets in first is front running the rest of the crew, even within my own, sphere of influence. So, and if a hedge is getting in New York, I have a couple of hedges like Tiger Management gets my reports. Tiger is big. If Tiger decides to come in, you know what I'm saying, they can kill people. So you got to find things where it has liquidity, and so you can depend on it, and then you go in.
Okay. All right.
By the way, the other day on the Netflix, when it originally came up because of Target, head of Tiger wrote to me and says, "Do you have an opening for an intern this summer?" It was joking, but that was a very nice pat in the back.
Okay, all right, Fari, we gotta move on. We got another guest coming on in a little bit. Thanks a lot for your lively commentary. We always enjoy it. Good luck for the rest of the trading week, and we'll be checking.
Don't forget, send me your emails. One of you guys send me an email. Give you both of your emails. I'll put you on distribution so you can see Amazon live as it goes out.
Okay.
Just like Kyle and Jason, because that's called transparency.
Okay. All right.
All right, Chief.
Thanks, Fari.
Guys, we'll see you next week. Okay.
Okay. Thanks.
Have a
Thanks,
good
buddy.
day.
Be well. It's always a pleasure talking with you guys.
Okay. Thanks, Fari. He's hyper today.
Yeah. He had.
I had a good trade on Apple. He made the money that I lost.
Yeah.
That Fari guy. He got me.
I forgot to ask him who J-Dot asked who Murray was. I think Murray's one of his consultants there in the office, but we'll be sure to ask him next week about Murray. All right, Dennis. Still 5 minutes before the 9 o'clock hour. Our next guest, Brian Sozzi, coming up. But anything on the imbalances of note?
Let's go take a little look here. What I am seeing this morning, General Electric, 127,000 to buy. They actually, was some rumors there last night in the Pro. Let's just go check that out. I believe that they were acquiring. Report From Bloomberg, GE is only interested in Alstom's energy assets, not interested in the whole company. So there was a rumor last night they were going to acquire Alstom, and that would be announced possibly this week. Now they are denying that rumor, saying they're only interested in their energy assets and not interested in their transport assets. So GE actually is popping back here now on that, and it's got 137,000 to buy. If you were trading General Electric, I will tell you the big number, which is still 30 cents away from here, 35 cents away, is $27. A couple 100,000 shares up there at the point selling. So imagine in the 80s and the 90s, it's going to start to thicken up as everybody leans on that level. AT&T, 145,000 to buy. Stock is up 20 cents here. Verizon, which reported 50,000 to buy. Coca-Cola, 54,000 to sell. That one's interesting. 41 is just huge. I don't think it's going to get up there today, but 500,000 shares up at 41, Joel. You don't see a lot of 500,000 shares.
And Coke, really, huh?
Yeah,
Wow.
500,000 to go at 41, so definitely going to thicken up as you get in the 80s and 90s on
Wow,
that.
look at that chart there. I mean, before that, I mean, boy, you are just getting. I mean, they had to run up after earnings, but holy smokes, 4 highs in a row here. 40, 72 to 81. Now bumping up, trading 76 in the pre-market here. So it's trying, but big number up there. I don't think people are short. There must be something else there because the HFTs would not be stepping out in the 70s or low
No.
80s ahead of that. So see if we get another pop there. It'd be nicer if it opened, something transpired off the open, but we'll see what happens during the regular trading session.
Yeah, it's something. It's just definitely some sellers all thickening up here, but obviously if it rallied up there, that 41 is huge. I don't really see too much else in the imbalances. They're actually pretty small here today. Just Pfizer, 54,000 to buy. It's kind of small, but it's trading up 15 cents here. So they're all kind of small, really. With the S&P futures being up 8 points, I think fair value's got us up 10 or 11 points here. It's actually kind of quiet on the imbalance front, so not that much happening from there. Also, we got a few other ones we could dive back into the earnings if you want, Joe. There was a few
Sure.
that we did not cover here that we didn't get a chance to. Potash, POT. This stock's trading up a little bit. Yeah, one we haven't talked about for a while here. 40 cents versus 35 cents on 1.68 billion versus 1.49 billion. Interesting enough, this one was trading a little bit down after hours last night. And often when you see that ahead of the report, it often means that it's probably going to miss. But they didn't in this case. They beat, and the stock is trading a little bit higher here in the pre-market, up 45 cents.
Let's take a look at POT here. Made a high in the pre-market, right at a nice round number here. 36 even is what we hit. We've pulled back to the 35.60 level. If you look at yesterday's range here, 35.71 was yesterday's high. So you could get this thing, 35.54 was yesterday's high. So could pick this one up, not really having a gap situation. See if it can make a run back up to 36. 35.71, you had a high 2 days ago. So getting a little bump here in POT. Is it affecting MOS at all?
Well, looking at the other ones here, you got MOS trading up about 15 cents. Agrium's a big one. It's not really trading up there at all. So, but you got to look at this one. You only have a 45-cent move in the leader. How much is it really going to affect the sympathy plays? That's kind of how I look at those. So, if it was up $2 or $3, I think there's better chance. Like when you see a Caterpillar trading up $5, obviously it's going to pull a deer up a little bit too. So,
Right.
need a little bit bigger move in the leader maybe.
JH3 just wanted to confirm in the New York book. Do you see 365K there at 50 in Wells Fargo?
And Wells?
Yeah.
I did. I don't see it there. Yeah, it's there. There's a ton of stock there. It's been there forever on Wells. I'm actually short Wells, full disclosure here. I short it last night at 49.82. I'm leaning in the 80s there. If it starts to obviously get up close, when they start getting in the 90s, I almost feel like they get sucked into it. So if I'm leaning on the orders, I like to lean a little bit farther away because when you get into the high 90s, all the high freaks and everybody else that's cheap is leaning there. I like to lean usually 10, 15 cents away from the level where it doesn't get sucked into it. I always call it the tractor beam where it sucks it into it when it gets close enough. And it gets above 49.90, so it's trading 49.95. It often does take it out. So that's when I actually don't want to be short the stock, is when it's getting very close to that. It's almost a play to buy it ahead of it, let it get sucked out. It probably pops a dime and then sell into that pop. So I'm actually leaning a little bit lower here, and it's trading 49.80 right now. But there is huge size up there at 50.
Just wanted to touch before we go to Mr. Sozzi here. Just wanted to talk about the Goldman Sachs here. It had the good earnings number. It sold it off hard off that number, but it regained its footing here in the lower. Had all those closes, three closes in the 157 area, and now it made a nice bump here. So we'll see trading up in the pre-market, folks. That 161.44 high from earnings day. That's your resistance point. But after that, boy, that chart looks pretty wide open to the upside.
It's kind of itching, and it's consolidated a lot in an area where it had massive consolidation and support in early February. It had the 1, 2, 3, 4, 5 lows right in that whole
Yeah.
160.32 area, and that's the area it's kind of struggling. I know it's a buck up, but it's a $160 stock, but it's kind of pausing here in this area, digesting the move. Probably people who bought it down there before and got underwater there, now they're selling maybe here. I think it is itching, though. It looks like it's itching to go. But the only thing you got to think about these financials, they really haven't participated as much as the broad market. Broad market 10 points off the high. Goldman Sachs 20 points off of its high. JP Morgan still weak off of their earnings report, obviously, but it's, we're talking 5, 6 points off of the highs of the move. Citigroup 5, 6 points off the highs of the move. Bank America over $1 off the highs of the moves. And the other one, Wells Fargo, is not too far off the highs, but the big banks here really haven't participated in this rally as much as some of the other stocks. So keep that in mind. Obviously, relative strength in these things still is not that great.
JDOT wants you to add leaning to the terminology dictionary, please.
And I can quickly define it here, then we'll go to Sozzi. But leaning, basically just saying that's basically all high frequency trading is. It's leaning on other orders. They're using the other orders to limit their risk. When you see big size out there, you have a lot of little guys and other guys that are leaning on that order thinking, well, if push comes to shove, I need to get out of this. I can quickly cover at that order. So when you get a big order like $50, people will lean on that order. They will put sell orders ahead of that, saying that, well, I know I can cover at 50 if I get into trouble. Now, humans can't do that anymore because the high frequency traders are so fast. But the high frequency traders lean on all orders. Basically, you put your order out there, they lean on it. That's what they're doing. They're trying to limit their risk, knowing that, well, I'm going to get a free look to the other way. And if somebody comes in to grab your order, I'm going to grab it before you can. So that's what leaning on orders is.
So it's a bit of a crutch. Is that right?
Yeah, but that's exactly what
Gotcha.
it is. You're just leaning. Yeah, it's why you call leaning or crutching. You're leaning on the other orders to protect yourself, to limit your risk. The other order is pretty much your insurance. And it's hard for humans to do that because the markets trade so quickly anymore. But market makers back on the day, that's all you used to do. You lean on your book. So if you had a huge, sell orders in your book at a certain price, you could sell ahead of that. You can't sell at that price because then you'd be front running your customer, but you could step ahead of them by a 16th of a point. It was back then, a fraction, and you can lean on your book. And that's what was done back then. And that's what leaning is. It's basically leaning on the other orders in the book for protection. And I think we got to go to Sozzi, right?
We're waiting for Mr. Sozzi here. All right. And we are dialing him up here.
I've actually got to hop off because I got to work out at Apple and I got all kinds of other trades on here. So say hi to Sozzi for me.
Good luck today, Dennis.
Okay, boys.
Hello?
Hey, Brian, it's Joel from Pre-Market Prep. We are live on the air. How you doing today?
I am doing wonderful. How are you guys?
Good. We got a lively show going on. This might be one of our best days with Fari on, and now we have you giving us your take on retail. Just a big macro here. Just what do you think of the retail earnings so far?
Well, we haven't gotten a lot of them, but if you're using Under Armour reported today, I think the quarter was very, very strong. Under Armour just continues to win. They're getting significant share of the floor space in Macy's. You certainly see it in Dick's Sporting Goods, and I think Nike should be paying more attention to what Under Armour is doing, specifically within the fit of their products and the quality of their product. I think Nike can learn a little bit from Under Armour at this point. And even outside the retail, I'm going to lump Chipotle in the retail sector. They're still a consumer-focused brand. You saw it's in 3 quarters in a row of sequential acceleration in their same-store sales, which already has me thinking to what Starbucks can put on the board. We came out and downgraded Starbucks 3.5 months ago, worked out good, but the trends that we saw at Chipotle were really encouraging. So I wouldn't be surprised if you do see a little upside in Starbucks' U.S. same-store sales, and part of that will be certainly because of the amount of gift cards that they sold during the holiday season.
So you like the CMG?
CMG, yes. CMG, we upgraded, and I think actually Benzinga picked it up 2 months ago. We upgraded it. It's been a pretty good call. We didn't like the stock reaction when they were reporting earnings last week, and I think that was a function of what the company had to say on input costs. But the bigger takeaway for us was just more people continue to pack these stores at almost all hours of the day. And you certainly see it playing out on Twitter. And it leads me to believe when they do raise their prices, I think they'll raise prices by about 4 to 6%, maybe a little bit higher than they guided to in the earnings call. You're unlikely to see a downtick in traffic into their stores. And I think it's an important takeaway.
Yeah, but it had an ugly day on earnings, and now it seems to be filling that gap from February. Now just kind of hanging out at the $5 level. So if you're looking to pick up something on a decline here, that's CMG has certainly done that. GGB saw your video on MCD there. Did they get your order wrong?
Well, McDonald's is an interesting company to follow. They didn't get my order wrong, but they didn't get me in and out of the store quick enough, in and out of the restaurant quick enough. And that has been one of the biggest challenges to McDonald's at this point, the operations.
Really?
The lines are significantly, there's too many people in the store coming in at once. It's a high-class problem to have, but they need to get those people out of the store much quicker. So you're now seeing McDonald's come in there, introduce new prep tables. So those will be fully installed throughout the U.S. supposedly by the end of this year. That's one factor. Another factor is inflation. McDonald's called out a 2% price increase, I think globally on its earnings conference call, but that's not enough, especially when you have some of their overseas, key regions overseas. They're introducing new items, let's say avocado burgers and beef burgers, and I'm wondering if some of these burgers are even profitable. And that's a disturbing thing because I just don't feel as though they have the pricing power running their market.
Boy, those
to offset cost inflation.
Yeah, avocados are expensive. I mean, I don't see that, fitting into their dollar menu there. I don't even know what an avocado costs you when you go to the store. But yeah, that's they're rolling that out overseas, or are they rolling that out here?
That avocado burger, I believe, is in Japan, and it's starting shortly. But by the same token, they've also introduced curry sauce burgers in the UK. So you have an operation, I think, that is just slow relative to what your better trends you're seeing from Panera Bread, Chipotle, more innovation, and I just don't feel as though they're able to keep up with inflation. I think at this point, McDonald's is a horrible investment. You can do much better elsewhere. I just feel as though the magic team is not getting it, and they are losing market share in breakfast. And they tried to downplay on the earnings call, but I just wasn't buying it.
I mean, this thing, if you look at it over 100, the last few times or the last few years it got over 100, it just hasn't held. So, been trading in a major range while the market has just been screaming higher. So, definitely the market's confirming your thesis on this one. J-Dot here, do you cover Dunkin' Donuts at all?
I do cover Dunkin' Donuts. We do keep that in part of our group because we do cover Starbucks. I know Dunkin' Donuts came out today reporting their numbers. I would have liked to see more within the U.S. Dunkin' business. I know they mentioned weather, but they've done some great things in marketing. When you visit the Dunkin' Donuts stores in the U.S., their stores are jam-packed with so much marketing, cross-promotional things with Baskin-Robbins. I would have liked to see more, but that goes back into what I was saying earlier on Starbucks. You put all the pieces together, Starbucks should have a pretty solid quarter.
You know what the problem with Dunkin' Donuts is their breakfast sandwiches. I'm a big breakfast sandwich guy, and they're not good at all. I've had it a couple of times. They need to.
They are better relative to what Starbucks is selling, and I think Starbucks have a long way to go to better present their products to the consumer. All these new menu items. I will say Dunkin' Donuts, at least they look visually more appealing. But one of the gems, believe it or not, Baskin-Robbins in Dunkin' Donuts has been Baskin-Robbins. It's a great comeback story that's going untold, and they're just doing so many phenomenal things within that brand on social media to drive sales, specifically on Facebook and Instagram.
Okay, the J.C. Penney here. I saw you kind of lightened up on it a little bit. It was just hanging out at $9 forever and a brother. Tight ranges, consolidated, and then broke down. Couldn't fill the gap, has that huge gap from the last earnings here. Came back to 7. Now we're just hanging out at 8 here, right in the middle. Earnings are coming up. How you leaning on JCP?
Well, we upgraded it. We upgraded JCPenney about, I think, in the low 7s. Maybe it was about 2.5 weeks ago. And it's a call that I slept on. I locked myself in an enclosed room before I came out and said something like that because we had a sell on JCPenney since January 2012. And I remember that day as if it was basically yesterday. And what we're seeing in JCPenney and why we did this is because our checks indicate when the weather has been good, people are returning to JCPenney, and they're not just buying one shirt and leaving the store. They're shopping basically the key apparel departments. And that's pretty important because the promotional levels on JCPenney, while still, how can I put it, they're still high, they're not as promotional as you would think given everything that's happened in the weather over the past couple of months. So people are returning to JCPenney, and I'm starting to believe that the market doesn't necessarily appreciate the profitability. They could return to profitability by the holiday season of 2014. I don't feel as though the market appreciates that. And plus, there are a couple of geeky things that we found in the 10K that are worthwhile.
Okay, so you're just doing on the metrics. I mean, the numbers that are coming in, your personal observations. Are you taking in chart patterns at all into account, or are you just going on what you see in the stores?
Well, we're going by what we're hearing and what we're seeing in the stores, what we're hearing from contacts in other stores, less so on the technicals, because the fact is this, if JCPenney can string together at least, and now I guess this is what I'm banking on, a decent back to school and a decent period up until back to school, there is a reasonable chance they could return to some form of profit, even though it's minor, for the holiday season of 2014, and in no way priced into the stock at this point.
Okay, let's go to the big box here, Walmart. Running into trouble here at the $78 level. Had sell-offs with the market, but just seems to be running into a wall here at 78. Well, what way you leaning on Walmart?
Well, the simple thing is on Walmart. If you want to lose money, go ahead and buy Walmart. I feel as though there is no reason to own Walmart shares, and even along the same lines, there's no reason to own Target shares here. I think both these companies have had very challenging first quarters. I think Walmart bought too many seasonal items once again. They remain severely disconnected in the U.S. business relative to what their consumers are doing. To have 5, 6, 7 aisles dedicated to Easter, and you see the after effect beyond Easter, bulging inventory levels of that Easter product, it's disturbing. So I think Walmart has an inventory planning issue. Their margins are under pressure. They're investing more to lower prices because of what Amazon's doing. And I feel as though the market just doesn't get that. So there's no reason to have exposure to that.
Did you see that they're trying to roll into medical clinics in some of their stores? Did you did you see that with Walmart? Just some walk-in medical clinics at all? Did see that?
Yeah, they've been looking at that for a while. It's just another area for them, or it's just this mindset of Walmart that they have to be doing everything or be everything to everybody. And I think with the new CEO at the helm, they would be it'd be in their best interest, I think, to take a step back and reflect on what is going on in their stores. And they cannot, if they walk a lot of these stores, they see things that we see, operationally, they're just not there. And you can see why, because the operation is just not up to snuff, why the financials continue to underwhelm. I believe they warned on earnings 3 times in 2013.
Yeah, not a good sign. And Costco is selling a little bit higher end products here. Costco's also running into a resistance area. It's really come off its high and having a hard time recovering. Been in quite the trading range. How are you looking at Costco?
Costco's a name we've started to be doing a little more research on. Me personally, I've covered Costco for close to 11 years, but I've begun to delve into a little bit more because with inflation has been picking up, and you're starting to hear more accounts of this. Certainly with McDonald's, you probably hear Starbucks issue a menu price increase, but inflation is picking up, and historically, Costco has done good during periods of inflation because their sales will get a boost, and they're able to gain share from other companies who just have to raise their prices and they lose volume. So Costco's a name we're going to be looking a little more into over the next 3-4 weeks.
Okay, Best Buy here. Boy, they came out with that bad news a while ago and just have not been able to recover. Dead money here as well?
We have a sell. We came out. We have a sell. You can see the sell rating on Best Buy. It's almost along the lines of Walmart. To play retail right now, you need a giant catalyst. Under Armour has catalysts. They're releasing a phenomenal product, but within Best Buy, there is no reason to own the stock because certainly weather in the first quarter, but they just don't have the upgrade cycle at their back. So that's first. And second of all, they're investing tons and tons to lower prices online and then within stores to compete with Amazon. And I feel as though it's the quarters first, second, and third before the holiday season where their margins can surprise to the downside because they're investing so much in price because they don't have the traffic to their stores. So I think when they do report earnings, you're going to see another very challenging quarter from them.
Okay, and so what else? Is there things that you're looking, you've been a little bit bearish on as well that you're kind of looking, perhaps to lighten up a little bit, maybe take a look at on the long side?
Well, I would say, before I got back on, we were looking a little more into Foot Locker. Foot
Okay, I
Locker's
was
a name
gonna
I've
bring.
liked. Yeah, Foot Locker I've liked for a long time. They're benefiting. When you see an Under Armour come out today and they put up a 30% sales increase, their footwear sales outpaced their apparel sales. How do you want to be thinking about, well, how do I play that? It's through a Foot Locker. And you go back to what Nike reported a couple weeks ago, just another strong quarter. These companies are being able to pass through price increases. Foot Locker's raising their prices, and the consumer continues to go into the stores and buy this new innovation. From both of these companies, Nike and Under Armour, are going head to head, and basically an apparel and footwear war that nobody's talking about. So I think Foot Locker, I think it's valued about 12.5 times forward earnings. That's a name that makes sense to me.
Okay, and Nike here, the big bad leader here, sold off back down to the 71 level. Now coming back up to 75 here, approaching some major resistance here. This stock just seems to sell off and always come back. Is that what you're rating on Nike?
Nike, we're, I would say, neutral on at this point. One, they're investing a lot ahead of some major global sporting events, certainly the World Cup. They're still putting a lot of money. I know they had the Fuel Band news recently, but they're putting a lot of money into still developing technology that coincides with your mobile devices. So a lot of investment spending, and also they're really exposed to currency. So I think as long as currency continues to be very volatile as it has, we're seeing that a consistent theme throughout earnings season. I think Nike will have a hard time breaking out. It's a
Oh,
name that you want to, I think, just put down, save it on your watch list, and return to it maybe about a week or two before they report earnings.
okay, and then make a play into it. And then Amazon here, been under some selling pressure. Trying to compete with Netflix on some things, getting a little pop up here. But hey, this stock is way down here from over $400, traded under 310 last week. I mean, the chart looks broken. What about your opinion on Amazon?
Amazon continues to not be my cup of tea. I know we always hear the, oh, it's overvalued argument, but nobody goes into why this is happening. My view is they just don't have the pricing power. As long as you have Amazon, the culture continuing to be that we're willing to sell general merchandise at a loss to hopefully sell some software, I think their margins and their returns will continue to be rather underwhelming. And they are very much in a price war relative to Walmart and Target because those companies are taking the fight back to them. Also, I believe it's the middle of May, Amazon Florida will start collecting sales taxes from the
Ooh.
likes of Amazon. There all have been studies popping up where Amazon sales have declined, where now the sales tax started to come out. So that's just another area of concern. And finally, I don't know much about Amazon because when you get onto the earnings conference call, you don't know much about the company. In my opinion, it's very secretive. And if I'm being forced to pay up to own a stock, I want to know more what the company is doing. And Amazon tells you nothing.
Right. Now if you can't find out about the company the way you do your homework and stuff,
I
why
think
have?
their disclosure practices are actually quite despicable. I mean, if you look at basically their every earnings conference call sounds the same. This company is giving you no information, and you hopefully try to find more in the financial filings, and they don't give you anything. So it's hard to get excited about a company that continues to underwhelm with their return metrics and their operating margin. They don't tell you anything. Well, I need more meat. I need to hear more of the story from the management team.
Okay, just kind of a little bit of a macro view here. The market looked like we're really going to have a major correction a couple weeks ago. Looks like earnings is kind of pulling us out of the abyss here. Great, earnings by Apple today. Other companies reporting strong earnings. Retail is later in the earnings season here. Market up here near all-time highs. Are you just kind of relating what you're seeing in the retail sector to the overall market? Are we good to go to new all-time highs here?
I've been surprised what I've seen. We've seen notice, I think, over the past week and a half, a surprising positive turn of events in earnings season. It did not, in my opinion, start off well. There are themes that companies' margins are still under pressure, and how are they beating by a penny, which is no great shakes because earnings estimates on the S&P came down pretty significantly into the quarter. So how are they beating, cutting a couple costs? But over the past week and a half, now you're seeing stronger beats from many companies, certainly like a Caterpillar. An Under Armour beat by 2 cents. You've seen a lot of strong beats today, for example. So I think now you're starting to get a justification for why the market has run, at least maybe over the past week and a half, and it leaves you more encouraged as we get, let's say, into the next non-farm payrolls report, which could be a major catalyst for the next leg higher in the market, because you've had initial claims come down significantly. You're seeing improvements in the regional Fed manufacturing surveys. You have the earnings beats. And one thing that companies are saying is that activity has started off very strong, or in most cases, at least strong in March and April as the weather has improved. So all signs point to at least a stronger than expected April employment report, and I think that'll be good for stocks.
Okay, all right. We've had Brian Sozzi on, of Belus Capital Advisors, giving us a just detailed, well-informed, personal account of what's going on in the retail market. You can't substitute for going into those stores. And I don't know, Jake or somebody made a joke that we gotta get Sozzi out from the stock room to come on to the show and stuff. So Brian, your analysis is really appreciated. Thanks for coming on, and we hope to speak to you soon.
Thanks so much. It's game time, brother. Have a good day.
Okay.
All right.
If you're investing in retail stocks and you're not following Mr. Sozzi here, who would you follow, Brent? Huh? Who would you follow?
I mean, I do like Kristen.
Kristen Bentz?
Yeah, she's good, but she's kind of less. I feel like she's definitely less sort of analyst side of things and more kind of like fashionista.
Yeah, fashionista. And
Not
you,
that-
oh
not-
no, you're the fashionista.
Not that
kid.
Sozzi isn't, classy and well dressed and everything. He definitely is.
You don't like what Sozzi wears?
I do. I do.
Okay, all right, we're going to move on to Joe Young here. I'm not going to call him Mighty Joe Young. I'm going to call him just Joe Young.
Oh, you finally got tired of that, huh?
Stern Joe Young.
Yeah,
Stern.
yeah, he's been really stern this week. I don't know. You think it's the wedding planning pressure that's getting to him? What do you think it is?
Well, actually, I just want to let everyone know that it is party weekend at my house because I'm a temporary bachelor this weekend. Dina's out of town, so everyone in the Options House chat room is invited over to my house for the weekend. We're gonna party. Just bring your own food, drinks, entertainment, and don't tell Joel.
I know where you live. I know what I'm doing this weekend. All right, Joe, go ahead.
All right. Today's headlines. President Obama signals deepening commitment to Japan. Obama pledged nearly unreserved support for Japan Thursday in its tense territorial dispute with China and offered breathing room in tough trade negotiations as well, signaling a deepening commitment to Japan and a potentially warming relationship with its right-leaning Prime Minister Shinzo Abe. Our treaty commitment to Japan's security is absolute, Obama said after a summit meeting with Abe. Article 5 of the U.S.-Japan Security Treaty covers all territories under Japan's administration, including the Senkaku Islands. Japan has been pressing for a clear statement of U.S. support in its dispute over the remote Senkakus, which China claims as Diaoyu. We're going to call it Diaoyu. Officials had worried that the Obama administration, war-weary and planning big cuts in defense, was no longer committed to its pivot to Asia. Obama also agreed Thursday to extend talks over a wide-ranging trade pact, which stalled over Japanese tariffs on cars and agricultural imports. The Internal Revenue Service awarded more than 1,000 workers with cash bonuses even though they hadn't paid their taxes or underpaid them. About $1.1 million was paid to more than 1,100 employees over a 2-year period, according to a report by the Treasury Inspector General for Tax Administration. A total of 2,800 employees who were disciplined for all types of misconduct collectively received $2.8 million in bonuses, extra paid time off, or raises between October 2010 and December 2012, the Inspector General found. How did it happen that employees whose job it is to collect taxes from other Americans didn't pay their share of taxes and were rewarded in the process? Simple. The IRS doesn't take into account if a worker has paid his or her taxes or whether they have gotten into trouble when administering bonuses and other awards. By the way, the IRS Restructuring and Reform Act of 1998 mandates that any IRS worker caught not paying their taxes be fired. General Electric is in talks to buy Alstom, the French builder of trains and power plants, people with a knowledge of the matter said, in what would be GE's biggest acquisition ever. An agreement may be announced as early as next week, said the people who asked not to be identified because the talks are private. The U.S. company may pay more than $13 billion for Alstom, one of the people said. That would be about 25% more than its current market value. Alstom surged as much as 18% in Paris trading today, the biggest jump since 2004. Hard to believe Facebook was once mired in mobile advertising doldrums. The world's largest social networking site reported first quarter profit and revenue yesterday that blew past analysts' estimates. Mobile accounted for 59% of advertising revenue, up from almost nothing at the time of Facebook's IPO in May 2012. The stock jumped as much as 6% in extended trading, adding to a rally that's seen Facebook's market value more than double in the past year. CFO David Ebersman is leaving on a high note, announcing his resignation yesterday after helping the company rebound from a disastrous IPO to build up to a market capitalization of more than $160 billion. General Motors said Thursday it earned $125 million in the first quarter, down 85.5% from the same three-month period in 2013, hit hard by a $1.3 billion charge for recalls. It was General Motors' 17th consecutive profitable quarter, despite the dramatic fall-off. GM's earnings per share solidly beat analyst estimates at 6 cents. When factoring in special items totaling $427 million, mostly for Venezuela currency devaluation or 23 cents a share, GM would have earned 29 cents a share in the three-month period. The Time 100 is the magazine's list of 100 most influential people in the world, and the issue features tributes written by high-profile guest contributors. Among the past year's honorees, Mary Barra, with her feature written by Lee Iacocca. Ronald McDonald made his TV ad debut for the burger chain in 1963, but last appeared in a UK ad in 2004 after complaints that the character encouraged unhealthy eating among children. Since then, the mascot has mostly appeared in promotional activity for the fast food chains, Ronald McDonald House Charities nonprofit organization, as well as being used for restaurant openings. However, from June, Ronald McDonald will front a global social media campaign entitled Fun Makes Great Things Happen, and has given the mascot its first makeover since 2005, with the new outfits posted on McDonald's Flickr page. And Hotel California is getting a facelift. Former Eagles member Don Felder has recorded a new version of the song with members of Styx and Foreigner. The three acts will hit the road together on the Soundtrack of Summer tour beginning May 2014. The new version of Hotel California has Felder swapping lead vocals with Styx's Tommy Shaw and Foreigner's Kelly Hansen. It will appear on the Soundtrack of Summer tour companion CD, which also will feature several of the best-known songs from Styx and Foreigner. The Soundtrack of Summer will go on sale May 6th, exclusively at Walmart. Felder, who wrote the song with Don Henley and Glenn Frey, has refurbished the song once before, giving it an acoustic arrangement for the Eagles' 1994 Hell Freezes Over live album. The Eagles have described it as their interpretation of the life in Los Angeles. In a 2013 documentary, Don Henley said the song was about a journey from innocence to experience. That's all. Today's trivia question, ladies and gentlemen, we have 3 minutes before the opening bell. When was Hotel California first released? Joel, you definitely were around for this one, I know for a fact.
I know when it was.
It's not like when Lincoln was shot.
That was definitely.
We're looking for month and year.
I would say April of '79. It's got to be a pretty big guess.
It's well, I'll just let Shubs post it in the chat really quick. See if we can source any answers. And let's see, Mosca, 76, Roasted Nut, 78, Joel, 79. Sorry, is anyone else got a guess in here?
You said sorry, 80.
Sorry, you're all
77.
You're horribly wrong.
76.
Joel,
75.
you had your guess.
82.
February 1977, off the album of the same name. Come on, Joel.
I don't know if that
knows
was horribly wrong.
It was
a bit drastic.
It was terrible,
Okay.
terrible.
Fair. You're the judge here.
But
the Eagles split up in 1980. They wouldn't have. Anyways.
Joe, not everyone has the kind of rock and roll.
You guys want another thing to make fun of me about?
You giving this?
Yeah.
Add it to the list.
You know the song "Big Old Jetaliner"?
Yeah.
Yep.
I thought it was "We Be Jetalina."
That's pretty good.
So, Eagles' original recording of the song features Henley singing the lead vocals and concludes with an extended section of guitar interplay between Felder and Joe Walsh. Hotel California topped the Billboard Hot 100 singles chart for 1 week in May '77 and peaked at number 10 on the adult contemporary charts, and then went on to win a bunch of awards and be certified platinum. I saw Don Felder in concert once. It's probably one of the best shows I've ever been to.
Awesome.
So that wraps it up for me, ladies and gentlemen. Just a reminder, the show would not be possible without our dear friends at Options House. That'll give you 150 commission-free trades. J-Dot, the Eagles did split up in 1980 and said they would play together again when hell froze over, which is why the tour in 1994 was called that. So just a reminder, if you sign up for an account through this page, you can get 150 commission-free trades from Options House just because you listen to Benzinga's pre-market prep. So click on the button, sign up with the account, get those free trades, and continue to enjoy the show.
And also, that would make me happy. So if you want to make Brentster happy, do as Joe just said.
Right. If nobody signs up for an account today, Brent's furrowed mustache will brow down. And it won't have that natural curl
Dingy,
up.
dingy, dingy, dingy.
Open for business, Brent.
We are opening at 1877.50. We've come down about 4 or 5 points from the morning high, which hit just ahead of 9 around 850. Joel, how are the S&P futures, that is, looking this morning?
Well, we hit 1882.50. I mean, I think it was Jake or young Kurt when made the comment when that Apple news came out and Apple was halted. All the shorts were like scrambling for cover,
right.
so they had to buy the triple Qs and whatever they can get their hands on, and now it looks like they're dumping them here. Apple, after opening up a crazy 43, 44 bucks higher. Tick 68.84 early. Now we're coming back down. Where it's going to stop on the downside, nobody knows here. But just imagine if they come back up through that 68.64 level, 68.84, you could see some sellers up to the 570 level. Really nothing in the charts to tell you this thing's not going to 600 in the next couple days before it goes down to 550. So taking a look at Apple. For the S&Ps, boy, we had a high yesterday at 80 and change. That coincides with the 82.50 level, so we'll keep an eye on that. But looks like we're coming back down
Definitely.
here. Yeah, maybe to get to settlement. What else? Is there anything change on the news desk here during our Fariness and
let's see.
Brian?
You know what? We did have a couple of economic data points out at 8:30. That was a little bit ago now, but
That hit the market? Did that hit the market?
Doesn't look like it hit the market. It looks like it did give a little pop up to hit that 1882.50 level that you just referred to. We got a little pop there, but yeah, we kind of lost it all. Durable goods for the month of March, a little better than expected, up 2.6%. We also had initial jobless claims, came in a little higher than expected at 329,000, and economists were looking for a reading around 315,000. Stocks, individual company basis, I don't think we had any breaking news while we were in the whole interview whirlwind there. A couple of great interviews we had this morning.
Okay, let's move on to the Facebooker. Wild pre-market action. Saw this thing all over the place. When we looked at this, when the show started, for you guys that got up, and gals that got up early enough, Facebook had reached the $65 level. Had seen a high at that level going back. When did Facebook? I believe it got up to 64.95, and that was back on March 26th. We haven't hit that level yet here in the session, so if you do get a run up through the 63.66 level, open 6 cents from the high here. 64.95 was the pre-market high. Also, GM reporting good earnings, shrugging off the bad press, bad news, bad whatever. Now back at the upper end of a trading range that's been holding up here. It was 33.50 to 35.50 for a long time. Had to break down below 32, but now you're coming right back up to that 35.50 level. 35.70 has held up as the high in the session. Going on the charts here for the GM. You did have a high right in this area before we broke down exactly at 35.70 on April 4th here. And if you're talking about GM, you have to talk about Ford's here. And Ford's, Dennis mentioning a huge institutional seller at 1650. We did open up 1641, got a little bump. Looks like the high freaks are stepping out ahead of that 1650 level. 1644 being the high so far in the session.
If you don't mind jumping away from earnings here really quickly, Joel, let's take a look at how GE opened. There was a rumor last night that they could be making a go at a company called Alstom. It is a French company. Deal would be over $13 billion.
That's a big deal.
That's a rather big deal. And there were a couple more headlines coming out earlier saying that the deal would not be for the entire company. The deal would just be for energy assets. Transportation assets would not be included. Just literally about 1 minute ago, seeing a Bloomberg headline come out that this potential deal between GE and Alstom could lead to a separation of GE's rail unit, and it looks like these Bloomberg headlines are confirming that the deal would be for just energy assets. Right when that rumor hit last night, they sold it off big, and then I think when traders found out that it was not going to be for the whole company, we got a little bit of a pop around 8 a.m. this morning, and now we have just sold off pretty sharply since hitting
Street doesn't
morning
like
highs.
it.
Exactly.
Street doesn't like it.
Exactly.
Price action saying the street doesn't like this deal. Came back 26.42 the close. You hit 26.47. Quickly reverse course here. Gap up from the earnings last week. Minor support 26 and a quarter. That was the gap up area that you had from earnings. So we'll keep an eye on that. 26 and a quarter minor support here. You could get down though into the lower 26s if the street really doesn't like that. And the S&Ps are losing quite a bit of altitude here, selling off from the open. Apple now almost $3 from its high. A lot of profit taken here. A lot of profits to be taken. Hopefully Dennis is wiggling out of his straddle there. 3M, right? They had some bad earnings, correct?
That's right.
And they were trading down in the pre-market. Haven't gotten to that pre-market level. Let's take a look at the open here in Triple M. Hit 135 in the regular session here. You did get a bounce off the open, so if you were shorting that off the open, you definitely took some heat. Ran up to the $137 level. Missed the close. Just keep an eye. 135 was the pre-market low.
So we have a big deal this morning. Zimmer to buy Biomet in a $13 billion deal. ZMH is the ticker on Zimmer, and the stock is trading up. Let's see if I can do a little math here. About $15.
They're the buyer?
Exactly. That's why I wanted you to check this one out. And we have come off of pre-market highs around 112. We're currently trading around 106 in ZMH. Are there any levels up here, Joel?
Let me take a look here. Just looking at the daily trading. So they think this is a really good deal for the company.
Exactly.
Huh?
Yep.
Let's see. Opened 106. This new all-time high for Zimmer. Nothing
Okay.
you can say
Okay.
here. 107 open, hit 108.33. Has come off here. I mean, huge gap. Look at how quiet those ranges where it had a buck range.
Oh, wow.
2, 3
You're right.
yeah, look at that. 3 days in a row, 4 days in a row, 5 days in a row, tight ranges. And then, boo-ha-ha, this thing announces the deal. Volume is spiking. We've already traded 2.6 million shares. Usually averages about 1 million, 2 million, 3 here. I guess if you got this in your portfolio, good for you. If you like the merger, hold on to it. If not, that's a big old gap to fill.
Yeah, in Zimmer's defense, if you're trying to explain this huge gap higher, they will be paying about $10 billion in cash. So I mean, they're basically lumping out the whole sum at once. They're not going to have much debt involved with this. So
Okay, S&P's always almost back to unchanged here. Apple's selling off from the highs here. You think it's time here to bring in Shaky Jake and see? Boy, we've got a lot today. I'd like to see what he has on his plate.
What's going on, guys?
Not much, Jake.
Hey, Jake.
Hey, just kind of getting things started here. Man, that Apple, I can't. Wow, that was absolutely incredible. Did you guys take a look at either Carnival or Royal Caribbean at all this morning? One of my favorite groups to watch.
Royal Caribbean with a little bit of earnings, right?
Yeah, they popped as high as 54.06 and then just kind of sold off, collapsing at the open. And then Carnival actually is remaining up right now, just 37.77. So I guess you could say they're riding a tide of investor sentiment. Yeah, that was rough. Sorry.
Yeah, Jake, when he always goes to the CCL, the RCL here. Looking at RCL, that was your leader. Satisfied with the street with the earnings. Opened up though 52.44, hit 52.50, then vavoom down to 50.96 here. Just alert our traders. There's got a 50-cent bounce off that level. You did have three lows, 50.63 to 50.93 with a 71 in there. So if you do break below 51 again here, look for support at 50.75. CCL, Carnival Cruise Lines. Let's take a look at that issue. That kind of a tight range so far in this one. This one's not really reacting to the news. Boy, big resistance up at that $38 level. Tight ranges as well. If this thing does not get back above 38 in the next day or two, you could see some downside in the issue.
Well, another one I'm looking at this morning, the ticker is TNP, Tango November Papa. It's Seikos Energy Navigation Limited. Company their shares are getting crushed this morning. They announced an 11 million share secondary offering yesterday, and you normally see a little bit of a dip on a secondary offering. In this case, it's over 12%. I think that the big reason behind this is that the company has an outstanding float of 54 million shares. So you're seeing a boost of over 20% to the float. So that will definitely take things down right there. Closed yesterday was at 7:30, I guess, and or at
8:35.
8:35. Yeah, 35. There we go. And now we're down at 7:30 right now. So huge dip right there. Shares just getting crushed. And they've had a great run up since actually like about, was it December when they've been running up? But Joel, what are you thinking on this one?
Did they price it yet?
It's not priced yet, and that's, I think, might be the scarier part to the street. You're adding a huge amount to the float, and it still isn't priced yet. It looks like the stock is basically at a high for the last year or so. But I mean, if it drops this much in just the announcement of the offering, if this isn't priced very high, this could get pretty brutal.
It looks to me the street is feeling they're gonna price it around the $7 level here, based on the charts here. But just the bottom there, I think people would be comfortable owning it at that level. So, always looking for the pricing on issues like this. So that's something we'll pay attention to.
Another thing I'd like to direct your attention back to is actually the futures in general, S&Ps
Yeah.
and NQs, just collapsing here. S&Ps came down from, was that 1880, now we're at 1872, really spiking down over the last, is that 10 minutes? I guess it's about 15 over that time, but really a sharp move to the downside there, right as we hit the open.
Similar to what Apple's done. Apple's now given up 5 points since its opening print here, 68.21, 68.84. Where this thing stops on the downside, who knows? Giving back some profits. Hope Dennis laid that straddle out again there on the volatility. S&P's back at unchanged. Just a big level here. I mean, back to unchanged after being so much higher. Boy, when we got up to the 1890s before on that unemployment day and it didn't hold, we had one ugly session here. Don't think that's going to happen today, but let's see if we can grab some support and make our footing here at unchanged and rally back up to the 1870 or higher 1870s. Offers will be coming down now since we're off 9 points off the high. Coming back on the downside, Tuesday's intraday low as well as the Wednesday's Globex low, 65.75 to 67. So that could be a next stopping point here, and if the bloodletting doesn't subside here soon.
Well, General Motors is pulling back after that rally that hit a high of 35.85 in the pre-market. Now they're back below $35, probably following the market down here as traders seem to be selling things off and
pump and dump.
Seems to be.
Is that it?
It looks
pump
like it
and dump. Hey, Dennis, put that one in the category. Pump and dump. Pump it up in the pre-market and then dump your shares on the open.
Absolutely brutal move there. So kind of keeping an eye on that. Another thing I wanted to kind of direct our listeners' attention to is silver and gold this morning. I kind of mentioned this right as I got onto the desk early on that they are really falling out of bed. They have now completely reversed. We have silver back above $19. It hit a low of 18.93 this morning, and it was at one time over 19.50. We are now right back to that, filled that whole gap. So it
Oh
was
my
down
gosh.
almost 2%. Now it's down just slightly. So this obviously, it looks like it's being fueled maybe by this recent market downside. Traders buying some
Did something hit the
commodities out there.
tape, Brent? We're falling out of bed here. Did something happen? I mean, this thing is market's just going straight down here after this open.
I don't think I'm seeing much.
This is some concerning trading action here going on in the market.
I'm
See
with
if
ya.
you can, see if you can find something. But yeah, cold, unexplainable rally here. Let's just take a look. I mean, we gave it for dad. We're looking for another 10, 15 points lower. Market weakness here coming back. We did get over unchanged there. 1284.60. We're hanging right here. So let's see. Gold jumping up here. 1287.60 is the high on the day. If the rally continues, 1289.10 was our high from the session, from yesterday's session. Then 1293.10 is another level here. Apple giving back $6 here. It was. I hope Fari got out of his call spread on the open too, because this thing is really, really coming in here. S&P's bounce off 1870, nice even number there, but need to get back above that close 1873 to get this market turned around after this big sell-off.
I'm looking at a comment from the UPS CEO. I know UPS didn't do so hot this quarter, but they did say U.S. and global growth not robust. Now that was 42 minutes ago, so that really shouldn't be causing an immediate sell-off, but maybe that's just kind of getting out there. When you have those big transports like that making bearish comments about the world economy, maybe that's enough to spark things to the downside. You also have more turmoil in Ukraine. Early this morning, when 5 more pro-Russian fighters were killed,
There you go.
Ukraine is on the offensive again.
There you go. There you go. Thank you, Jake. I knew there had to be something out there in the wires. S&P's that drop 10 points like that. Nothing like a war or something to get the market going.
But what's weird is that's been out there basically all morning. I don't know why that's just happening now, but I mean that could be your headline risk there, I guess.
Just the UPS, I almost got a look at yesterday's high, 99.85. I was turned back to 99.79, and now heading back lower. But, hey, held in there, though, after the downturn in the earnings. In the stock after earnings were released. I just wanted to follow up on a little bit of a theme from yesterday here. Dennis wants to know that after hours low in Apple. Hold on a second here. After hours low in Apple. Let me bring it up here. S&Ps are almost at yesterday's low here, folks. So if you guys are, trading this thing from the short side, coming up on a key technical level, Apple in the after hours session opened up exactly at it opened in the 550s, Dennis. It opened at 5 when it reopened here, 565, had a 552.60 low, and then went straight north. So you got another 10 points to go till you get to that pre-market low. As well, gold exploding here. Oh my gosh, we're almost at 1,300. It must be that what's going on. But oh my gosh, it's 9:48. What are we doing here, Jake? Why didn't you cut me off?
Guess it was just too much good stuff.
Joel, you're on a roll.
Okay. All right, folks. Enjoy the rest of the day if you can here. S&Ps are just completely falling out of bed. We'll be back with you tomorrow to recap the trading action.